Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, co-founders, entrepreneurs, executives, artists, musicians, sports figures, you name it, across the world in crypto and blockchain. And today I have an amazing guest. He is the founding member and head of business development at Horizen Labs Ventures. His name is Rohan Handa. Hopefully I pronounced the Honda part right. Rohan, welcome.
Thank you so much, Jamil. Pleasure to be on the show. And yeah, you did pronounce my last name right. Very few to have that on correctly. So really appreciate it.
Awesome. I was taking a guess. So let's kick things off and ask you first. What is your background, and is it a logical background for what you're doing now?
Yeah, I think that's a great question. I think if you're talking about crypto and Web3, there's nothing linear or logical, so to speak, you're required to be within the space, right? As long as you understand the basics of it, and have the passion and drive to innovate and build new things, you're in the right spot. My background spans across multiple different areas. I started off as a management consultant in financial services, spent a bunch of time in the US, then moved to Southeast Asia. That was where I first saw the impact of blockchain as a technology and how that region in itself was leapfrogging the way the West typically does business, mostly from the financial services angle, right? They had something called Pay Wave already in pack, which is you don't have to swipe your credit card before, in retail stores and for commerce. You just tap your card and you're good to go. And this is to 2015, right? That technology came to the US a few years later. And also saw firsthand how some of the people in the region were using crypto, Bitcoin and Ether as a payment of exchange, or a medium of exchange, I should say. Right. And that just blew my mind. From that point on, I was just completely soaked into the space, came back to the US. I was running venture studio and investments for a Spanish finance institution called BBVA. Started some amazing startups while I was there. Invested in a few startups, made some joint ventures, connected with Consensus and Joe Lubin and his team to forge a joint venture within the crypto space and see how the financial institution itself could participate. And I think that was kind of, my orange pill or blue pill or a pill into the Web3 crypto space. All in all, I doubled down on the space, ended up, running the Open Web Collective or Near Protocols accelerator program. I was one of the early growth members for Rarible DAO, which was building a protocol off of the Raribles NFT marketplace. One thing led to the other. I advised a bunch of companies within the ZK space, invested my own capital to learn a bit more firsthand from the entrepreneurs and operators within the space, and then joined Horizen Labs, and rest is history, right? So that's kind of as a quick layer of background. I enjoy working with entrepreneurs and founders who are building innovative and continue to push the boundaries within Web3 and crypto at large.
Sounds wonderful. So I'll ask you first, and I have a couple of follow-ups from what you said. But I'll ask you first, what is Horizen Lab Ventures all about, and what makes you stand out in a crowded field? And then I'll ask you how your experience at Near and Raribles is helping you now in your role.
Absolutely. So Horizen Lab Ventures is the premier Web3 advisory firm, right? So how we'd like to position, we are the McKinsey for Web3. We provide end-to-end services to projects and clients, both who are operating and building in the crypto blockchain space, but also Web2 companies who want to enter and have a strategy around how to build and appeal to the communities, leverage new technologies, and create new revenue and brand engagement opportunities, right? So just to give you an example, we worked with Yuga Labs team back when there were just 4 founders, and helping them carve out their fungible token launch strategy, right? So we were the launch contributors, and the services from an advisory perspective that we provided were working on the strategy, the roadmap, tokenomics. We help facilitate legal conversations, right? We build the smart contracts, brought in third parties to audit those smart contracts before the token contracts went live. We work directly with the market makers, centralized exchanges. We're proud to say the token was launched on 50 plus exchanges on day one, which was unheard of in that point in time. It still is. And we continue to add value beyond that, helping them with the Otherside NFT drop. ApeCoin DAO later on employed us to launch their ApeStaking Protocol. And that led to multiple different avenues and advisory opportunities for us, where we work with companies like the Sandbox, Animoca Brands, Dust Labs, which are the creators of the Utes and the Degas NFTs, Force, which is one of our recent ecosystem partners, and several other gaming companies, requiring services all the way from white paper to the token launch to DAO and beyond.
I didn't realize you did all that work with Yuga. I want to talk about that. Let's talk about these launches and the best practices, right? What are some of the best practices that you've seen with this token launches, and what's missing, and how can you improve upon what's there so far?
Yeah, and I think that basically is at the heart of what HLV does, what me and my team think and breathe day in, day out. And we try to kind of create a playbook or best practices, as you'd call it, on how to launch these tokens, right? And there are essentially 7 fundamental aspects to it and what you need. So one goes without saying is your community, right? Which is managing the engagement mechanisms. And we can go deep into each one of these, but I want to lay those out first. The second is your tokenomics and white paper, right? How do you design the token utility, the economics for that token, and the flow models, including drafting the token white paper, because that's how you communicate your vision for your business model to the wider world. Number 3 is the legal framework. How do you efficiently navigate compliance and enable protections for your end users, right? There's no hiding the fact that there's legal uncertainty, a legal fog that exists within our ecosystem, and it still almost more or less operates like a wild, wild west, right? So it's very important we operate under a certain legal and compliant framework that doesn't put founders and operators in trouble down the lane. Number 4, technical aspects, right? All the way from your software development cycle across smart contracts, front-end user interfaces, your token distribution, product integrations, audit, and testing. These are quintessential for the token launch, right? Because you only get one chance to launch your token. And if things are technically flawed, and if drains out all your tokens or someone hacks into it, you're done. That's it. Number 5, the decentralization aspect, right? Coordinating all the components to create and launch a DAO, right? You want as many partners, as many players in the ecosystem, so there's enough demand for your token, so that people are using it day in, day out. And last but not the least is basically what we orchestrate for our partners is program management and launch sequencing, orchestrating roadmaps and work streams, managing the timelines and resources, who's involved from our end, who's going to be involved from the team, the partners end, and what our subject matter expertise they bring in versus us, navigating the risks and dependencies that exist, and eventually coordinating the launch event. I think those are the 7 key pillars that separates successful token launches versus the ones that take what I call a YOLO approach and launch it just because they can.
So number 6 was program management, and number 7 was the launch sequencing.
No, so program management, launch sequencing are number 7. So if I count it back again, it's community, tokenomics white paper, number 2, legal framework, number 3, technical, number 4, market strategy, number 5, decentralization, number 6, and program management and launch sequencing is number 7.
Okay, we skipped over the market. Okay, all right.
I apologize. Which is what I could add on is essentially comes down to your listing strategy. your exchange integrations, and market maker coordination, because all of these players help make sure there's enough supply and volume and liquidity exists when the token launches.
Got it. So let's break down each of them in a little bit further. Let's start with community. How can somebody who has no community or a tiny community start to use socials to be able to grow that community when none of the socials seem to be giving that person or entity any love, or they're fading them? How do they break through?
Yeah, I think what it comes down to, what we have seen as a pattern emerge more often than not, is an initial founder or a group of founders identify or establish their core supporters, right? And that's a similar pattern we have seen in the Yuga Labs when they did the Basie and the Macy stuff, right? The same thing happens in the DeGods, same thing happens in Azuki, same thing in Oni4. They're those initial contributors that exist, who believe in the founder, who believe in the project, who believe in the narrative. So if I were to launch an NFT, I need to make sure my narrative and story appeals and has a core contributor group towards which I'm telling the story for, right? So for example, Oni4 and Azuki, they speak to the Japanese culture of art, right? Basie and Macy was appealing a lot more to the early NFT enthusiasts and celebrities, and creating that class of like, I'm in a closed social, exclusive social club. And that helped kind of facilitate word of mouth spread, right? So you identified your initial 10, 20, 100 users who believe in the story that you tell. And then after that, it becomes network effect, or n times n-1, right? So if you have 100 core users and then word of mouth spreads, you have 100 times 99, and that, you have thousands of users following it. So it's very important in the initial stages that your story is clear and you identify your initial, hype generators who will help tell that story further and create the community on your behalf. So it's got to be organic, because if you try to do that in an inorganic way, it's bound to fail.
That makes a lot of sense. It does. You said you got it in the mid 2015, 2016, right? And that was just the start of the ICO craze, right? Things have changed since then. And back in 2017, if you had a white paper, people would throw money at it, right? Now, having a white paper is not just enough. You have to have proper tokenomics. So what do you found has changed over the years, and what people should be looking at as far as when they build tokenomics?
Yeah, I think there are so many aspects to tokenomics itself, right? And you're right, like back in 2015 to 2017 timeframe, people were literally throwing money at anything. All you needed was one person kind of backing it as a celebrity endorsement for the project, and you were good. And in many cases, not even that. From a tokenomics aspect, what this has done has brought to light an area which essentially determines your business viability and the way you help create supply and demand for your project, right? So one aspect of it is the idea. The other is how that token aligns the incentives for the community that buys into that idea, right? Right. So tokenomics, there are few things to think about, right? You're talking about token specifications, which helps define the key parameters of the token. Could be the name of the token, the type, your supply, your type of model. Is it inflationary or deflationary? You can have token contract upgradability options and several other characteristics. Then you get into the distribution schedules. What's the supply allocation, right? What's the unlocking and vesting schedules and mechanics for token distributions for various stakeholders? As you'd notice, most of these token allocations, you'll have number of tokens that's used for ecosystem. Then you have for the founders. Then you have for core advisors. Then some of them you have for marketing, and so on and so forth. So that is how you determine the distribution schedule for each of these players or launch contributors matters. Then the token economy design. I mean, the funny thing is, like, economics is such a theoretical field. It's not an absolute science. It's hard to create an absolute economy. So this will, by default, by inherent nature, will be an evolving subject. So there's not going to be a proper economy that encompasses all your token drops or models. Every project will have its own. So it's important to understand that. So that means you need to create a robust token economy by identifying what are the use cases the token is going to be used for. What are the implementing mechanisms for this token, right? The sinks and faucets, as you would call it. Determining the token emission rates, how quickly the tokens are being emitted and its mechanics, the token flow models, and conducting like scenario analysis. And there are a few other things that to incentivize the token usage is your airdrops and claims, right? That's what gets people interested. How do they contribute? What is the incentive for them? What's the platform and product dependencies? Are there any dependencies on a specific platform or products that we need to ensure for compatibility, for integration? And then post-launch token rewards, right? It's easy to generate interest, right? But it's hard to sustain that interest over a long period of time, especially in a distributed model when your attention is what you're really trying to farm for. As a founder, I need an engaged community. So I need to be on my feet to continue to think about new models, new syncs that people remain engaged. Last but not the least is the governance features. Decentralization is the key to a lot of it. And I think as we think through a lot of legal and regulatory hurdles, the more decentralized it is, the better. So you're talking about utility models, you're talking about governance tokens, you're talking about, all of these different aspects. And this dwells further into the DAO. So determining the governance mechanics, features that will enable token holders to participate in decision-making processes, all of this becomes part of your tokenomics consideration. And without that, anything that comes later on, whether it be the listing or smart contract development, is highly, highly dependent on the tokenomics design itself. So that has essentially what's changed from 2015, 2017 era to now, where founders and operators are thinking more deeply how to incentivize, how to engage, and how to do things more properly so that it's more of a business and not just a copy pasta in the crypto space.
No, that's definitely grown an area. So that's exciting and interesting, because I remember 2017, I was like working with a founder. I was sat down and we just typed numbers in the spreadsheet and said, "Oh, this should be the token economics." So it's definitely grown.
Yeah. Yeah.
So the third one is the legal framework, and you said legal fog, and we have a lot of legal fog going on. We have SEC.
Tell me about it.
Yeah, accusing certain cryptos of being securities without any backup of that. How do these NFTs and how do we skirt those outreached arms of the regulators, and how do you deal with the legal fog? What do you envision being the path?
And we think about quite a lot, and especially the early June when SEC came after Binance and Coinbase. It created a lot of fear and uncertainty in a space that's already kind of filled with it, right? But it's important to distinguish the two aspects, what was happening with Coinbase and what's happening with Binance, right? So Coinbase has been accused of, well, at least the allegation is to be selling unsecured tokens on a registered platform, while Binance has been accused of misappropriating user funds and selling unsecured tokens or to US natives, right? So there are two very different class of allegations that have been put forth by SEC. It's important to note that is because the environment that we are operating from and the rules and regulations that are being applied, the simple fact is they have not been codified. So if you remember back in 2018, I want to say, so there was a gentleman by the name Bill Hinman. He was the SEC director for the Division of Corporate Finance. So what he said essentially during the time was, if the network on which the token or a coin is to function is sufficiently decentralized, where purchasers would no longer reasonably expect a person or group to carry out essential managerial or entrepreneurial efforts, the asset may not represent an investment contract, hence not a security, right? So, and this code was never codified, and now we are in a different SEC regime pretty much. So what's happening is this goalpost keeps changing, right? So you imagine you are on a 1 yard line, you're going for 2-point conversion, and the referee says, no, now you're back on the 15 line. So and you're going for a winning drive. Now, doesn't matter who the quarterback, who the operator is at this point. He goes back into the field position again. The referees come back again. Oh no, 10 more yards of penalty. By the time you start taking the throw, you realize you're on a 1 yard line on your own field side, right? So that's essentially what's happening. It's being perpetuated by this authority that has far-reaching hands, and it's trying to pretty much suffocate the space out of existence, right? So several of these projects that have been named in the case behaved, frankly, in the way Hinman had suggested could be sufficient to avoid being considered a security, right? So they change over time by building like governance features, as we talked about, or a foundation that increases that decentralization of projects. But now, if you look at some of the projects that are in, now we are using Howey's test as a way to determine these, right? So it's not clear what rules are being applied to what tokens. So it's hard to operate in such an environment, and that's why we hear a lot of these founders are frankly just leaving U.S. shores to set up operations outside, whether it be in the UK, whether it's in Dubai or Hong Kong or Singapore or Taiwan. That's not good for innovation overall. So unless we have a clear guidelines on how to operate, what we can or cannot do, it's going to be very difficult for founders to do business in a straightforward manner, which is being offered to a lot of other operators in other highly regulated industries, whether it be healthcare or financial services or anything else.
Yeah, I agree. I have experience back in 2017. The former SEC chief moved the goalposts a lot, and I try to keep the movement, and I moved myself out of business. I totally get it. So technical aspects, right? And you talk about hacks, right? And recently, the UN's Financial Action Task Force called upon all its member states, including the US, to enforce a travel ban on CBDCs, cryptocurrencies, NFTs, everything to counter money laundering and North Korean hackers, right? You don't hear much about NFT hacks as you do about other cryptos from government regulators like Bitcoin. But what's the status and the outlook of NFT hacks, and what can we do to shore up those technical aspects?
The issue with NFT hacks is the custody of the assets in the majority of the cases is with the users themselves, right? You have a MetaMask, you go to OpenSea or Blur or whatever, you connect your wallet, and then your assets sit on your MetaMask, or you're going to your ledger or somewhere else. So it's a self-custody area. I think in 2022, we had $20 billion worth of NFT value being drained from the ecosystem via hacks, right? So that's users clicking on wrong links or just exposing their assets to connecting to the wrong contracts. There's a lot of brute force hacking mechanism that's being deployed. There's social engineering that happens. In fact, in many cases, some of the projects' Twitter accounts were hacked. Now, if you'd imagine if you have 100, 200,000 users using Twitter as a way for communication with your project, and they see first thing, hey, hit this contract and you'll get whatever, the next airdrop or next tokens, or here's a reward. As a user, unless I can really take fast action, I'll be inclined to do so because I want to be first in line. So there's steps being taken by the industry to prevent some of these hacks, prevent some of these scams. But the best we can do at this current point is just make sure the links that are being clicked on, the NFTs where you go to mint on different platforms, are actually legit. And there's no harm in double checking whether it be through the official communication channel or through Discord, or just maybe just wait a little bit, right? Because FOMO is what's creating a lot of the hacks and providing these hackers an incentive to attack and phish some of these unsuspecting users and community members who all they really care about is supporting the projects, but they end up being trapped in an environment. And the other thing that I'm starting to notice quite a bit is what we are calling what's in financial services known as early warning systems, right? Which monitors the user databases, the different protocols, and make sure that, or try to at least statistically ensure that the protocols are safe, there's no anticipated hack that's about to happen, and there's correlations using machine learning and AI that gives certain level of risk indicators that your protocol or your project might be in trouble, and inform those projects early on. So I think we'll start to see a lot of those tools being deployed in whether it be in NFT projects or just fungible token protocols at large. And lastly, I would say is continuous auditing of your smart contracts is important. Because one thing, if anything, that we have realized from technology innovation and evolution is that as technology evolves, so does the hackers and their tool set evolve with it. So if you're not continuously tracking and making sure your smart contracts that were audited last year and the hackers have now found a new way or loophole through some new technologies and brute force into your existing contracts, you might be at risk for losing a lot of those assets. So just continuous maintenance, just as a building requires continuous maintenance, any of these coded smart contracts and protocols require that continuous maintenance. So it's very important to audit them as frequent as possible.
I'm glad to see we have tools to do that.
Yep.
So that wasn't there a few years ago. So it's good. Yep. Let's talk about, you mentioned the word, you said Blur. Mm-hmm. And let's talk about market strategy. So I want to see how the Blur NFT launch worked out, how that did well, and compare that to the ApeCoin launch, which is considered industry-wide as the baseline for token launches.
I think one thing, Blur did some of the things from an execution standpoint pretty flawlessly. But I think the two comparisons, it's not an orange to orange comparison, right? So if you remember, so ApeCoin is an avant-garde for the token launches for the NFT communities. When it was done, it primarily capitalized on the hype cycle of that market, right? It was primarily community driven, first of its kind, first into the markets, first in terms of the hype and the people behind it, right? So it created that hype and excitement within the space to back it. Note that there wasn't a product that was offered at that point in time, right? There was just a fungible token launch and a DAO that accompanied it, right? What's different in Blur, they switched that approach. So if you know, so Blur is a marketplace that's dedicated primarily to professional NFT traders, right? It was launched in October 22. They had the soft launch in February, in early April of 2022, and then eventually launched their token in February of this year, right? So during the 5-month period, which was between October and February, what they did is they gamified their entire go-to-market strategy. What that means is they tied a very coordinated vampire attack on OpenSea, right? Which was charging, I think, 2.5% fees for on the royalties. Blur took it down to 0. They had really viral growth social media tactics, and a commitment to enabling NFT traders to operate at the highest level. So that means they had a very single-minded focus that who were their target audience to generate interest. And that goes back into your network effect, right? So they knew who they were going after were these high-frequency trading type NFT traders, while OpenSea was open to all sorts of traders. Blur was dedicated to NFT traders who traded more frequently than they would have done, say, on OpenSea. So that changed the incentive. right? So they had this initial core of distribution mechanism or traders who were going on and trading at really high volume. So if you notice, what the biggest the marketing buzz that helped Blur was they were trading close to 100 million in volume compared to OpenSea, which was doing like mere numbers, right? So that's created the differentiation because people were now flocking to Blur to trade more often. For trading that, for wash trading, they were getting points. So there was leadership points that were part of it, which would eventually get converted into tokens. So they gamified this entire experience for their users, giving traders the option also to pay royalties if they didn't have to. So it created that product-based go-to-market approach as compared to ApeCoin, which was primarily a hype-based, go-to-market approach. And one is not better than the other, but what I'll see, the thesis is we'll start to see more of these product-based go-to-market strategies come to life, because I think the wave of just launching a token and hoping people will come and take a bite and we can delay the product launch to a year, 2 year, 3 year, it's over.
I got to ask my follow-up. I'm going to skip number 6. I'm going to skip decentralization for now and come back to it. I'm going to talk about programmatic launch sequencing. And I want to do a comparison because you just said that you think it's over. And I'm going to show proof of you that it's not. How do you compare Blur and Ape versus Pepe?
Well, that's a third completely different token launch, right? It was, so I think Pepe comes to mind, and then last year, if you remember, Goblin Town had that similar flavor in the NFT side of the house, right? So what's coming up as a pattern is, so these comes under the category of meme tokens, whether it be NFTs or fungible tokens, which are purely community driven. And this, more often than not, you see in time periods where we are in deep bear cycles, where not much activity is going on and people are just looking for something to hype things up, right? So these are, again, those your influencer marketing strategy with nothing else to base off of, creating this viral impact off of what you call, KOL or key opinion leaders who have massive following, and they're leveraging that following to pump and dump the price of certain tokens. So I will never discount the fact that meme tokens are real and they're here to stay. Meme is just what is denominated as a cultural phenomena. That's what meme really is. And culture, you cannot put a value on. If you have 1,000 people who believe strongly in a culture and that perpetuates, you create a movement. And that can happen, right? Bitcoin started like that. So you're right. Like, it started as a very small group of nerds and thinkers who wanted to change the way financial institutions operate, how centralized things were back in 2008, 2009. And that became a movement that has led to where we are. So you're right. I don't think it's Pepe is definitely an outlier. Goblin Town are clear outliers. But what I am and what HLV stands for is launching tokens that are legal and compliant and have some sort of business viability down the lane. Does Pepe have that? I cannot make an argument for or against yet, because it's primarily driven by hype.
I like that you said it that way, because we want to talk about legality. And your sixth point was decentralization, where you brought up the concept of DAO, right?
Right.
From an organizational standpoint, for somebody who has the skill set to be sitting on a corporate board, but not the pedigree, DAOs offer people an opportunity like me to be able to be on the governance of a board, right? But certain legal ramifications and rulings have come out that saying any holder of a DAO would be first personally responsible if something went wrong with the DAO. You know, how do you deal with those kind of crazy or wild or whatever, maybe improper interpretations of what decentralization is, to give people the opportunity to build organizations for the future like DAOs?
Yeah, I will preface this by saying that I'm not a legal expert, and a lot of these things happen in areas neither I'm an expert nor will I take credit for being able to justify what's being done. But what I can say from a business standpoint, and having participated in various DAOs, the way DAOs are structured right now are not sustainable, right? Hoping that you have a token and you have a governance token that allows its community members to vote on different topics and different things is not sustainable, primarily because there is, by default, the way the mechanics of token drops and airdrops and incentives are done, it by nature is rewarding big or holders and early supporters of those projects, right? And you can see that as a clear example in ApeCoin DAO. While I'm proud of launching it, it was the first of its kind, and what was done, the way it has evolved since has really tilted or skewed the incentive towards the big bag holders of the tokens itself, right? They have the power to dictate where the DAO goes. They have the power to come in last minute and sway the direction of a proposal in the direction that they see fit. So there's a lot of politicking that happens, which is not necessarily bad, but it needs to be consistent. It needs to be truly democratized. It needs to find mechanisms so that the smallest community member in a DAO, in a community, has a voice. And that doesn't happen if you make it completely decentralized from day one. So what needs to happen, and I still do believe, is there's got to be a path towards decentralization where you create these super knit bodies that provides those guardrails, whether you call it special council members, whether you call contributors, come up with guidelines that allows other community members to participate, right? Defining the purpose, goals, and vision of the DAO and documenting it, right? Identifying the criteria for that DAO membership, recognizing the potential core contributors, selecting a suitable DAO admin to facilitate those smooth operations and so forth. Eventually creating what I'd call a contribution economy, where everyone who's contributing gets rewarded, feels important, and then carving out the right voting mechanics, right? It cannot always be one person, one vote. We need to think about more novel ideas. We have these petri dish where we can experiment. Things like quadratic voting has been thrown out, right? Where the person who has most skin in the game or most values a certain outcome more, puts more on the line versus person who may not have as much incentive or desire for a certain proposal to pass or certain outcome to come through, right? So those are some of the novel areas which really need to actively be tried for, and that will make life easier, not only to understand how the structure of these organizations work, but who are the right people to help govern and grow these DAOs ecosystem from hybrid sort of centralized and community driven to purely community driven, right? Because right now we don't have those frameworks, and it makes it difficult for people who have been, as you said, on boards to take lead and do this full time, which is exciting because you have the opportunity, a blank slate, to drive the direction of the community of the DAOs in an area that is compelling, that you believe in, and bring the entire community along with it, using proposals, using votes, using grants, using new products, and using this decentralized token mechanism to incentivize and reward the base.
I like that petri dish concept.
Yeah.
I've been looking at some recent communities recently, and I see a lot of infighting, and I think people are getting frustrated that we've been in a depressed market now for a year, and they don't know when we're going to come out of it, right? So, what do you think? And it might be NFTs, and it might be something else. What do you think is going to be the next proportion out of this petri dish and moving forward the industry?
If I wish I had a crystal ball. I could be making $1 million a day just to answer that question. But let me try to answer it in a way that hopefully explain the thought process behind how I and HLV operate, right? This is obviously a capitalist-driven environment, right? So what happens in a cycle, if it's a perfect loop was to be designed, and you can start anywhere you want, right? What the price typically creates interest in the initial, whatever token, so to speak here. That interest helps generate new ideas, right? And that new ideas, the petri dish allows you to create new products, new startups, new projects. Bitcoin did that for the broader system. Then Ethereum created that. It created the price went up. It was nothing but pure belief in the fact that we're creating a new internet where you can open, read, write, and also have control of your own data. If you were to look at it from that perspective, we are going from a cycle of infrastructure to products, to infrastructure, to products, now back into the infrastructure cycle, right? So I think the core infrastructure L1, L2s are already established. You have Bitcoin on one hand, you have Ethereum that has a massive ecosystem. Second, third, fourth don't even come in comparison. You have maybe Solana, Polygon, Immutable, Sui, Aptos. They all have very paltry number of daily active users. So I don't know how that ecosystem is going to evolve. But as far as I'm concerned, I think the core new internet layers are already established. It's just a matter of scaling them up, securing them, and making sure new application users come to mind. So from that perspective, we think gaming, and when I say gaming, I'm not talking about just pure games. I'm talking about gamification of aspect is what will get users into that ecosystem. And what that'll be driven by is the contribution economy aspects, because you have created on one hand crypto tokens, and you have tokenomics, and you have reward mechanism and incentives, but you're not using that properly. Every single aspect that a user is coordinating both off-chain and on-chain can actually be recorded. And you can help gamify that and rewards each and every user based on their on-chain, off-chain activity. That is interesting to me. It's not passive income anymore. I'm not just staking my coins. I'm not just staking my NFTs. So what we'll see is a lot of contribution economy and gamification aspects come to life. That will happen through real Web3 based games. We're working currently with Animoca Brands and some of the other IP ecosystem to build PvP games and bring them to life. We'll see the gamification aspect, like StepN was a great step forward. I think we'll continue to see the evolution of it, where you get points and rewards for just moving, right? So you'll see a large part of it because it's just embedded. It's right there. You don't really have to do much, but you're being rewarded for it. And then two, I would say, is more so on the, if you're talking about NFT, we'll start to see a lot of NFT financing aspects come to life, right? If you think of these as like real assets, you start to fractionalize some of these assets, lend against some of these assets, that's going to be helpful, right? We're already starting to see Blur do that quite attractively, right? Their buy now, pay later program, which is a peer-to-peer perpetual lending agreement, Blend, which is already, is the top NFT lending protocol on ETH blockchain. They've done over 10K in ETH lend. So we'll see a lot of those flavors come to life. And last but not the least is usage of these technology sets in real life examples. So NFT is a great technology, but we try to sell that as an application, which is a massive disconnect. Everyone talks about NFT, but if it is non-fungible technology or token, right? That's what it is. It powers applications on top. So I think there's a massive use case to be had within the ticketing industry, right? There's massive implications to be had within the points and rewards, wherever you have these points and rewards system, whether it be your Amex credit cards or it could be your airline points. that exists, right? And then eventually you'll start seeing more and more on the digital art side of the house. You'll start seeing more on the tracking systems, supply chain mechanisms, because NFTs are nothing but proof of authenticity and ownership, and that it does beautifully day in, day out. So that's what I'm really excited about: the gamification piece, the fractionalization of NFTs, and then the real use cases to ticketing and rewards and points mechanisms using the underlying technology.
Awesome. I'm excited about the future now. It's great. I want to thank you very much for your time today. This has been an amazing conversation. Learned a lot. It's great. So I have one last question. It's probably the one I have asked you. And it's how can people find out more information about you, about HLV, about work you do? How can they do that?
Absolutely. So you can reach out to me via Twitter, where my handle is parzival_0x, or directly through LinkedIn. You can find me, Rohan Handa. I'm always happy to connect with pioneers and thinkers and tinkers within this space. I love working with early stage founders. Our company loves working with products and projects that are really, in a truly innovative manner, pushing what can be done in Web3. This is our passion. This is our baby. And we welcome all projects, operators, and builders who are building to build a new internet where a lot of exciting things can be done, and while you're still at the control of your data and information.
Awesome. Thank you very much for your time today.
Thanks, Jamil.